Good morning, everybody. This is Brian Caprice, and I'm going to be hosting the Monday morning market breakdown today. I hope everybody had a great weekend, had a great Mother's Day. If there's any mothers on, I just want to tell you guys a happy belated Mother's Day. We appreciate everything you guys do for us. We had some we had a laid back weekend. You guys will be able to tell. You guys have been here for multiple weeks. My voice is actually here. A little bit stuffy. We've had rain for the last day and a half, and we had no lacrosse yesterday, so it was kind of a nice little break as the season's coming to an end. We did have one on Saturday, and we got 1 week to go with that team. So everything was much relaxed. Didn't get the yard work done, but hey, it is what it is. It's Monday. Now, this is an interesting week for trading, and like how last week was a huge kind of cornucopia of events that we can trade, this week is going to be a little bit more shy. So I'll get into that briefly in a second here, and let's just go through kind of who I am real fast so you guys know, for those that are new to today's broadcast, as well as our disclaimers. So if you don't know me or you've been here before, I apologize for this, but if you don't know who I am, I've been an instructor at Major League Trading, as well as I'm the co-founder of Major League Forex. I've been trading for a long time, seen a lot of things. I've been here since the tech bubble, so I've seen two gigantic market crashes. I've actually been, I was a financial advisor. I work for one of the big three. Seen it from the outside as a retail trader trying to learn, seen it on the inside as a financial advisor managing money, and then seen it on the other side as an educator teaching people how to do it themselves. And seeing the emotions, seeing the swings, and seeing how the market handles things. I used to work right down. I work for a company that we are located about 2 blocks from the NYSE. I used to walk past it every day to go to work. So definitely had some really cool experiences. For me, you guys can see this is my family. I am the primary caregiver right now for the little one. Mom works actually for an advisory firm, and I have the little one home with me. So as you can tell, life is pretty busy, and because I'm busy and I'm not one of those people that likes to sit in front of a computer for 12, 18 hours a day, I just think that's ridiculous. I've created a couple different programs, 30-minute trader as well as a 5-minute binary courses for Major League Trading and Major League Forex, really to use technology. Look at the courses, place the trades, and then go about living your day. So you'll see me setting up a lot of zones, a lot of set and forget type trades. Very big on risk management and money management, and that's really how I'm focused for my trading. As I mentioned right now, I take care of the little one, Jin. She's 11 and a half months, and I believe she's teething. So that's been the fun thing for the last week, 2 weeks, as well as the two little guys are no longer little. I mean, they're 9, but they're growing and almost already as tall as my wife, Melissa. So that's me in a nutshell, and let's go to the risk disclaimer. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions you make are solely your responsibility. I don't ever want to hear anybody say, well, Brian said. No, it's your responsibility. You're hitting the buttons. I'm not doing it for you. Now, past performance is not necessarily indicative of future results. Nadex contracts are based on the underlying assets, including Forex, stock indices, futures, commodity futures, and economic events. Now, trading can be volatile, and I love volatile trading. If you like volatility, you loved last week. And investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Very important to understand that. Some people, where I first learned was the traditional options realm, and there are obviously scenarios in the options realm that if you don't know what you're doing, you can lose a lot of money fast and owe more than you actually, basically have, right? If you're, have the obligation. Nadex, that can't happen. It's whatever the initial cost to get into the trade is basically what you could lose on it, no matter what happens. Very big perk and very big benefit to Nadex. And if you don't understand that, make sure you guys jump into their education center. Excellent resources if you are a new Nadex trader. Now, Nadex is subject to U.S. regulatory oversight by the CFTC. Also very important to understand who they are. And with that being said, let's just jump into the news for the week, okay? So as you guys know, these are my top 3. It's kind of like my big countdown. This week was a much more difficult to, where last week it was brimming over. We had 2 number 3s. This week we go the complete opposite direction, and it's much more of an anemic week. So first one is the Aussie. The Aussie has been absolutely amazing to trade at night. If you guys are not trading at night, like I said, I don't sit there for 12 hours, a day. But there are certain times of day where I will jump back, and news is one of them. And these news trades at night have been absolutely great. Another big advantage to Nadex is being able to take advantage of these nighttime trades. If you were going to jump over and trade this in the futures market, a little bit more difficult, a little bit more, little bit more margin required. Nadex doesn't have any of that. So for me, nice time trading the Aussie has been great. The number one release this week we have is, again, the Aussie employment change and unemployment rate. Those will be 9:30 p.m. Eastern time on Thursday night. Always a nice little time to trade those. Next one will be Wednesday morning, 8:30. It's a big kind of a dual news release time. We have core retail sales as well as CPI for the US and CAD. A lot of times those joint ones can be, for lack of a better word, feast or famine. You can have two misses and they're great, or even two kind of expected and great. The only time it does get a little bit weird and we don't see the large movement is when we have one good, one bad. But I think retail sales is going to be important with everything going on. Obviously, with the market taking a big dip, we'll see what the retail sales numbers look like. But for CAD, also a very important week. CPI is always a good one. Whenever you hear inflation, the first thing that people look at is inflation and then interest rates. Okay, interest rates are a very, very, very large mover in currencies, and it always starts off with the talk about inflation. Okay, and the first one of these numbers is for CAD is over here. Now, actually, the next one is on Tuesday night at 9:30 p.m. This one, it's just because really lack of other, other news releases. But we have Aussie 9:30 p.m. again, and it's their wage index, and it is considered a red or a high profile release. It's not one that I trade often, but it's by itself. It's in the middle of nowhere. There's nothing else around it, and it's considered a high profile release. So that's why it made number 3 for this week. And again, I'll go through the list real quick. But those are our number 1, 2, and 3s: Thursday, Wednesday, Tuesday. Let me drag this over. So a great place to look for news releases, so you can obviously know when you need to be back at the computer, so you're not spending all day there. And by the way, I love this image here. This is a great image. Go over to dailyfx.com, go to charts and calendars, and go down to economic calendar. A few things you need to do on here. First is you need to change your time zone. Just click on the button here and choose the time zone that you are in. Then also I'd go down to filters because you don't need everything. Get rid of the lows because those typically don't move the markets. Get rid of the Mexican peso. We don't have any exposure really to that. I will leave China up there. China's numbers will move the Aussie and New Zealand. Okay. So it's nice to know when they're releasing things there. And then just to get a brief overview, you can click medium or high. I'll click medium and just leave it at that. One thing I also like to do, particularly for my weekend planning, is I will click the weekly view. Click the weekly view and you'll get all the days, and you can kind of see Sunday pops up there. So as you can see on Monday, absolutely no considered high profile releases. Just not a whole lot there. A lot of Japanese news, but again, the Japanese news, besides kind of an interest rate change, which typically you don't see, not typically too much, right? Going into Tuesday, that's where we had the one release. Now, you do have consumer price index for Germany, which can be a little bit of a market mover, although it's very early in the morning. If you're a West Coaster or you're from Europe, then you could potentially trade that. East Coasters, that's probably not a big enough news release that you're going to want to change. Right after that, right after the London Open, you'll see there's a bunch of pound news. About the best one in here is probably the jobless claims rate. Unemployment rate isn't bad. It's a 3-month-over-month rolling. It's not bad, but it's not considered a high for the pound. But again, if there's nothing else going on, that may be a mover if you're awake. Going into it, really the only two high profile in the morning, it would be the survey expectations. That would be Eurozone. And again, we're expecting the Euro to start talking about recession and things like that. So the hard part about this is it's a number, but it's not one of those kind of breaking headlines like, oh my God, the German survey expectations, the zoo survey expectations came in and they're at 5. Most people are going to look at that and have no idea what that means. That's necessarily real big. And then you'll see we go into the morning, nothing much. And then again, here's this wage index, and over here it's actually considered a medium release, but it's kind of out here by itself, right? Aussie is considered one of the big pairs. Basically people have gone from 8:30 in the morning till basically 9:30 p.m. at night with nothing. Okay, so that's where this one comes in right here. All right, this Chinese data, again, if you're up, you can look at this. Again, it's a lot of the smaller things. The retail sales numbers aren't bad. And again, what this will show you is what their economy is kind of forecasting. Now, what does make this interesting is with all the new kind of tariffs and things put on. Obviously, this morning we're going to hear. I guess actually we've probably already heard, if we haven't yet, what type of retaliation China is going to put back on us, obviously for the new kind of tariffs, and that's why the stock market really kind of tanked at the end of the week. it'll be interesting to see what some of the Chinese numbers look like tonight, because obviously if now that they have these things, these numbers all need to be taken with a grain of salt, particularly, industrial production, and then again, retail sales. Um, the one advantage that the United States does have in this whole kind of tariff battle back and forth is we don't really get a lot from China, but they get a lot from us. So we can actually hurt them a lot more than they can hurt us. Some of our companies are obviously taking it on the chops, but at the end of the day, they can tariff. We have a few industries that'll be affected, but it will hurt their economy a lot worse. So with that being said, cranking up these tariffs, it'll be interesting to see what these numbers say and what their responses are to them. Okay. Now going into Wednesday, again, we start off early. You'll see some gross domestic product. Again, super early releases, not a bad time if you're awake. For most people in the United States, this is where things are going to start kicking in. And you'll see here's the CAD numbers. The Consumer Price Index is obviously marked high. It's expected to tick up a little bit, which is good. And then we'll go into the core retail sales, and that number is actually supposed to be not as high as what we had before, this retail sales advance. So we'll see what it looks like. Then you see it kind of tears off throughout the day, and then that's where we get the unemployment change at night. And it's actually marked as a high release. This is by far the best release of the week. Again, if you guys are not used to trading news, great time to do it. This has been, for me and my students, some of their favorite kind of trading opportunities. And again, 9:30 p.m. Eastern time, okay? Going to Thursday, you'll see, boom, right back down into all mediums. Again, different sites rank things a little bit differently. Not a lot there, right? I mean, we have initial jobless claims, that'll add to it. Business outlook, building permits, housing really doesn't move currencies at all. It's kind of like, the financial system review, I expect this to come back fine. I don't think this is going to be any bit of a mover, but you see, pretty anemic day, right? Not a whole lot there. Going into Friday, again, same thing. We have one high release, University of Michigan Consumer Sentiment. That's considered a high. Sometimes it's a good mover, sometimes it's not. It depends on if this number misses. And again, they're starting to dial it in. It's getting better. I mean, if this number comes in, don't expect much movement from it. When there was less volatility, less craziness to talk about, you obviously, this is a bit more of a mover. But like I said, it seems like the easiest way to kind of go into the weekend and make people think about something is for people to have like some type of news releasement or Twitter battle or Parliament fight or something like that on Fridays. So those seem to be the big movers on Friday, not necessarily something like consumer sentiment. All right. So with that said, let's jump over and let's pop this out. There we go. Let's go into charts. So last week we saw a lot of volatility, a lot of movement, and again, a lot of things that we had talked about. So we had that gap last week, and we talked about looking to fill that gap, and that's what it did back on the 4-hour. And this would have been on May 7th, which would have been, last Tuesday? Last Monday, we were down in this area, okay? You'll see May 6th? You're looking right there, okay? We were in this area talking about a bit of a retracement and continuation. One of the patterns we talked about is we had this area of buyers, this yellow kind of beam here in the middle. And we talked about there's some, a bit below. And what made this trade interesting was we had that gap down and we blew through two different zones. And a lot of times when we breach a zone, what we're looking for a price to do is come back up and retest. And we did that. It came back up, it retested, and it has just dropped. And it's just continued to push down. And since that time, we had a little bit of a pullback. It pulled back into an area of kind of basing and then collapsed again. So where we are with this one, I mean, you can see that, price has not been down here till all the way back here in January. And one thing that we had mentioned, if you guys remember, and you'll see it on a couple of charts, we have this you'll see big blue boxes where we have this long candle here marked off. We're actually inside of that territory right now, going back to kind of from here across, right? That's what this blue line down here was for. This was one single day, one gigantic candle. I mean, it was huge. This is an ATR of 62, okay? This one candle was 207. So it was quite large. And now price is just driving through that back down. So a target on anything really to the downside is looking at this 75-25 area. And it's just pushing. And again, when you go back, you guys can see this is what those spikes look like on a 4-hour basis, right? So not really a lot, sitting there in front of us. So definitely something we need to kind of keep an eye on. And again, price is at 76.40 right now. So we're down to here, right? I had marked off these two boxes as potential targets, weeks ago. But we're at the first area. And again, a little bit of basing right here. I think it's gonna, I think we'll continue to push down, and we'll probably get stuck around 76 for a little bit, and then trade number 2 would start kicking in. But um, right now, I mean, you got to be very, very cautious with this one. And again, Aussie numbers is what we've talked about. Right now, Aussie wise, what I'm looking for, again, there's 2 ways to play news. One is playing the breakout before the news is released. 2 is playing the retrace. Okay. For this one on the downside, we're so close to this downside target right here. The 76 is round number. Not sure that that's what we should be looking for to target, but one thing that I'm going to mark off and kind of keep an eye on is this was the gap, right? The 4-hour gap from last week. This is where price came up, touched, and collapsed, and it didn't breach the top of this zone. So for some reason, if price does bounce and it shoots up again, 200 pips is a lot, but if it does go back up and grind into this area, this 77, what is it? 77.90 to 78.15. I'm looking at, in areas in there probably to start getting short again. And this would be off of a retrace with news, something that spikes up like this to come back down. On the lower time frames, again, a little bit busier. And a lot of these things are from prior levels that no longer matter. I just haven't taken them off the chart. A bit of a gap to the top side here. And again, this is a weekly thing here. Okay. Really, this should be kind of near term would be down here. And we're kind of wedged, if you guys will see it, near term, gap to the top side. We're wedged in there. So we need to kind of break this level in the short term. Again, I'm more looking for where it's set up news-wise. And again, I'm going to look at the 4-hour. Maybe I'll look at a 2-hour if I have time before I can get, before the release. All right. Looking across at Aussie dollar. Again, Aussie dollar, very similar situation. This one had the same type of, this one actually gapped into the range. It bounced, gapped, and then went higher to kind of push back down. So this one did not have as clean of an entry, and you guys will see it's much more, on the 4-hour, it's much more hugging into this kind of originally kind of selling zone down here at 70. And again, round number, I get it. We've pushed lower now. We're about 30 pips below that zone. But no, I can't really say at this point we're really in any type of true trend, right? I mean, on a 4-hour, this is what we have. It did go lower. It's not at its low yet. It's close. But again, it gapped down to this area, so there's typically buyers there. And we came back and touched the same area, and we're there now. So I need to see a clean break before I'm looking to get long in this one. Again, same type of candle, although this one is more wick, where the other one was more body. So similar setup to this one. Again, the eventual target's probably down into the 70, what is it, 67, 70-ish range. Again, about 200 pips from where we are right now. But it needs a determined trend right now. It's just literally sideways. It's just, this is just, again, you guys can see no true trend. And again, this is basically sideways, okay? Dropping down, let's go into the next pair here. Next would be Euro. So Euro pound had an interesting bounce last week. We had talked about before, again, this was the Brexit zones, right? We had talked about this upper kind of red zone. Again, I haven't crossed, brought all the way across. And then we had this bottom zone, and it actually bounced right off the bottom zone again from where this kind of Brexit bounce back and forth was. And 86.50 was kind of a hot number, and it literally drove all the way back up to that area. Okay, it came right, you guys will see right here, this candle, that's right at the 86.50 right there. Again, here was that zone. If we continue that zone across, it's actually there. Okay, you guys will see that's what we tagged, and now we've kind of stopped. Okay, it was giving us a signal like it wanted to roll over and head back north or head back south. Spent around a time over the weekend, and we got to kind of see where we're going to be at. Now, this one does have conflicting signals. If you guys look in the upper right-hand corner of each of these charts, you will see this is sideways down, this is up setup, and this is down setup. So again, this one we really need to get somewhat of a bit of movement here. And again, not a lot of news on this one. A lot of the news kicked in tomorrow. Like I said, still looking off to the downside, although we've just moved sideways at this point. Obviously on the daily it ground back up, but we are grinding back into this area where we had some basing and some dropping. Again, just on a smaller, kind of in a smaller time frame. Okay, so bearish, not signaled, not entered into a trade yet. Nothing. Again, need some momentum. I think typically on Monday morning, European traders are a little bit slow to get out there, but we'll see. Again, with Mother's Day, maybe they're just slow to get in. We'll see what happens when the U.S. traders get in. See if we can start pushing back down. Areas on this one I'm looking for, actually I'd move this up to about there. I'd be looking at the 86 area. Again, it's only about 28 pips from where we are, but if price grounds down, that could be the nice kind of catalyst we need to kind of push back up again. And we'll see, this channel is not very large, and you're only talking about a 40 pip channel. So it's not even really, when you talk about spread, it's not even really 2 strike prices. So just be a little bit cautious. Again, on the daily though, I'm definitely more bearish. I'm looking to kind of take this bounce back down into the 84 range. Looking at Euro Yen. So Euro Yen also entered that large candle that we had mentioned before. Very similar, right? We had this huge wick down. This one has a 68 pip ATR. This one, that one candle was 460 pips. So again, huge movement in that one candle, and that's the area that we've entered. So we've broken below, and this was a very common area to set up some traps, and that's kind of what we saw, right? Price broke below this, came back up, retouched, and is now kind of, started kind of the retrace back down again. Same thing, we had a gap, a large gap that we saw. This was actually a double gap, right? Gapped here and then gap back up again. Same thing, gap came up, and again, this triggered Monday last week was what, right here, okay? Price had gone up, it had touched, and then started to pull back down again. So yeah, so Monday morning would have been right here, and we talked about being right at this gap location. It went down and then it stabilized. You guys can see again on the 4 hour, very expected, but you'll see this is Friday. We just kind of ran out of steam, and really it goes back into here, back into like the 9th, right? If we mark that level of facing, right, we had a brief kind of run to the downside, and then it's pulled back up. So at the bottom side, but again, not necessarily a nice trend there. No, obviously no big gap over this weekend, and with no real news, not a lot of catalysts. Like I said, this is quite an insignificant Monday morning. Okay. Again, basing here, flat tops. So nothing screaming on this one. We're ready to go. Euro Aussie is one of those things that we've now pushed all the way back up. We did push back into this zone on the daily. Okay, so you guys will look right here was an area of basing, and that's an area we hit once and we hit the second time. And we're kind of in an area right now. If the price goes any lower, when this candle closes, we close any lower, it's going to start giving us lower highs. All right, so we're having higher highs, higher lows. Well, if this is a higher high, that's also signaling that we may be looking back to head back to the downside. And same thing, we did push back up into a daily zone. Actually, this daily zone should be there, right? Let me change this real quick for you guys. Let's see, red. There you go. So that's what we kind of ran into, although you'll see it's pierced it came back, it pierced it again, and now has not gone quite as high. So we'll see when U.S. traders get involved in this one, what direction it looks like we're going to be heading in. At this point, I wouldn't say we're in a strong uptrend. We're running into some things on the daily. You will see we do have uptrend set up. Actually, it's like I said, sideways up confirmed, sideways. So everything right now is screaming sideways. Again, Monday morning, we'll see if this is going to flip and turn and head back to the downside. If we do get ahead to the downside, again, we've done this kind of same measured move multiple times now. If we wanted to take it again just to get a draw for a potential target to the downside, you're looking at this 110 range. Again, that would have to be some good U.S. strength. We'll see, if magically they decide to remove any, with everything with the kind of trade war going on right now, I don't know that the U.S. is going to get enough strength until we get some clarity on that one. But on a technical basis, yes, it should be. We should be, taking the same measured move. If we bounce it from here, it looks like 110.25 would necessarily be the target, and it may take a while to get back down there, but that's kind of how we're looking based off bouncing off the areas. Okay, let's go down to pound yen. So pound yen, we had marked off this last week talking about if this was the break to the downside, we had 2 potential targets. We had our first target here, which would encompass this area, and then the second one would be heading a bit lower before this kind of pullback in this larger move. We did complete the smaller one last week, and again, that's what we drew last Monday. It bounced, it hit this area on the upper side, and then continued to push through. Didn't actually give us the retest we were looking for. Where we are now in this position, though, and where we are heading this week, obviously there's a bunch of Japanese news, but this thing really flatlined on us, right? And again, this is about, we're talking about 100 pip range, but, yes, it did go back and forth, but the trend has been sucked out of this one, okay? Looking on the larger time frame, again, we had that impulse down, the correction, and this may continue the impulse, but again, we need some movement in this one, right? I mean, this one is, this is again, talked about this the other day, right? Like the EKG, right? The boop, boop, boop. I mean, like it's just flat. This one should have already started to move for the day, and it hasn't. The way that this pair works, and this could be something to watch out for, this one has an ATR of 104, and a week or two ago, this had an ATR of about 150 during this kind of Brexit bounce back and forth. Now, it is good that we finally broke the bottom level of Brexit, and we said that it was most likely going to break because we had one test here, we had 1, 2, 3, and number 4 was most likely going to be the breaker, and it did. It's good that we're cleared that now. Okay, so we can actually start, technically trading this again. But the thing to look for this one is if this one is a very small ATR for the day, right? If it is unable to do its 104 pips, kind of candle to candle top to bottom, right? Typically, it doesn't happen multiple days in a row. I mean, yes, you can see it twice here, and then we start to have larger explosions whenever there's anything news-based. Okay, so if you do see, a couple slow days in here, like 1 day or 2 days, start looking for potential. Start looking for news releases for a very large movement. Okay, if you go back to here, this is where you can kind of go back and use the actual filter. Again, use technology. Okay, go in your filters and figure out, okay, let's get rid of everything besides the pound. Okay, we can even, we'll leave medium on. Okay, so you can see nothing Monday. Tuesday would be the day for the mover. So if we have a very, very slow today, tomorrow morning early for the East Coasters or a little bit late for the West Coasters, this is going to be the mover of the week, right? Because you can see there's nothing. There's no high or medium news releases the whole week, okay? Unless they come out on Thursday and talk about Brexit, there's nothing here. This is it. 1 day of news this week. So this would be the day where there's the mover. So if we see nothing today, look tomorrow for some nice movement. Okay, and again, any of these things can move it as well as retrace it. Okay. Going down into pound dollar. Okay, pound dollar. Kind of a similar situation, although this one is not quite hanging out there the same way, right? So we came back up, we hit levels on the daily, we hit descending wicks, we pushed down, right? We broke below, again, not the best zone that it broke through, right? Came back up and retested, but we have our impulse move, our correction move, and again, looking for somewhat more of an impulse. Now, this one did come back down and it hit and bounced off an area that we were looking for to target. I was actually hoping it would break below this. I really wanted to go below this gray area, come up and retest, and then continue to push down. You guys will know we drew this last week. Again, our session last week was over in this area. This was an area that we're looking for because of this kind of wick over wick, right? And we even dialed down on the 2 hour and saw this one. Since that time, since hitting that area, this one has been kind of wedged in a much smaller area. And giving it the benefit of the doubt here, it's a 50 pip zone top to bottom, but this one has an 86 pip ATR. So the last couple of days, guys look back, right? This is today, that was yesterday, last week. A lot of wicks up and down, a lot of indecision. My next push, I'm actually looking for this to head back into this area. I'm looking for the 129.45-ish area. That it is capable of hitting that a day. It's only 52 pips away. It does have an 86 pip ATR. So again, this one does have the potential to run. Without a lot of US news today, again, this is another one I expect to move tomorrow. And areas that I'm looking for this one to potentially move would be potentially up into this kind of basing level here. Okay, let me change this color. We'll change this one to gray. Okay. One potential area there that I'm looking at, and on the downside, same thing. I'd be looking at this level of basing here. Okay, I'm going to leave this. I'll remove this now. Right, this is the level that we bounced off of, so we know there's some potential buyers there. But this is kind of the range that I'm looking at. I'd like if we can end the night up here or up here. These zones are, pretty low risk, right? 16 pips on one side, and 16 pips on the other side, and we're smack in the middle. So if we can grind up to one of these two areas during the day today, wouldn't be a bad trade setup. Looking, going into tomorrow's news. If you ever heard me speak before, I love news trading, but one of the big things that people don't understand about news is the data is already released before it's actually released, so people know what it is. You can position yourselves a lot of time before the news is even out. Okay, this perfect scenario of where this could potentially happen. All right, so mark those two levels off. This basing here on the 4 hour, this basing level here on the 4 hour. That's really the last time we had really any type of pullback and a bit of movement. This gray one, you can remove that one if you guys don't want. I'll keep it just because I want to. I'm gonna look for an entry on the bottom, although most likely wouldn't take anything because we have a zone below it. Okay, but those are the kind of the brackets I'm looking for in that. Going over dollar CAD. Dollar CAD does have some things to trade this week. So dollar CAD kind of smacked its way off this kind of top, this same sell zone again. I'll move and readjust this zone now, but there's the actual pullback from the zone. Okay, and that's what we hit the pushback down. So this one has gotten pretty messy. It's been a lot of bouncing back and forth. You guys can see it on this lower time frame. And very similar to that last one, we had an area where price pulled back, bounced off some levels and pushed. And again, it respected that, okay? This one I can remove now. It's been burst. So really, that's kind of what we're looking for as far as potential kind of tops and bottoms for this one. One thing to take of note on this one, again, this was actually our trade from last week that we had set up. If you guys remember when we talked about the CAD news, US CAD news kind of, this was actually that move. It was a 90 pip move last week. It was the unemployment rate. I don't know that we'll see the same type of move this week. I don't think 2 weeks in a row they're going to see the unemployment rate change in the CAD. For some reason, I had a feeling last week. I don't know that I have this week. Where we're right now, one thing to take note on this one is this kind of bottom area here. Pretty nice kind of entry, right? Very fast entry, very fast exit. So although it's not a very large zone, it only goes from 133.86 down to 133.75. So it's only about 11 pips, and we drove about halfway through it. There is a little bit of a backstop right below it. You guys see this kind of area, like this right here, this bit? A little bit of a backstop with orders here, and then obviously you have this piece right here. Okay, so a little bit of a backstop on this area, but if price is going to start pushing down, it's going to run into some stuff down here on the bottom, some buyers. Top side, I'm not as concerned about it. If we can get back up to the 135, definitely be flipping my mindset to it's time to start shorting. Downside, I'm definitely looking for longs in this 133.50-ish area, or 133.60-ish area actually. But again, I'd like to see some actual momentum. Just not like this is good back and forth, but this is starting to consolidate a lot, and it came back up, and it's consolidating right below a daily kind of sell level. So, if we can breach the top again, the next area is going to be 136.50, but that's pretty high for this pair. That's a lot of dollar weakness to get up there, and it doesn't stay there long if we're able to break the 135. But equilibrium typically is this 133 area, which also coincides with what we see on the 4-hour. With that being said, dollar Swiss. So dollar Swiss, obviously, I'm sure everybody can figure out why this one has 3 big red pieces coming to the downside. As I mentioned before, last week was we were what? Here? Yeah, right here. Basically, this is any type of disagreements or geopolitical events. North Korea firing missiles, Trump jacking the trade wars, anything. Okay, anything that leads to global instability will set this pair off, and that's where you see this one, to the downside. Now, we'd marked off this blue zone right below this, basically this basing level here, and we've seen it enter there. We're actually about 70 pips into the move. A little bit late to jump into this move now, though. If you're not already in, if you guys can see down here on this, bring it down. You guys will see we had this area of basing, and that was actually pretty conservative. It should have been that. We've just bounced off of that. We've seen kind of it slowing down, right? You guys will see there's a lot more wicks, a lot more candles over here, as well as both U.S. traders being, getting ready to jump in. This could start, it could start retracing a bit. If we do get a breach of this zone, though, and it retraces back in, yes, I would be looking to get, potentially enter the trade there and take the short lower. But you got to have a potential target of 125 or 10025. Okay, it's going to have to be a target on this one, just because that's where the last base and kind of launch point was. But again, I think there'll be a lot of reactions this morning when business comes online to the tariffs, the reaction to the tariffs, and any kind of banter, now that it's Monday morning and everybody's back to work. So this trade entry obviously would have been last week when we breached really this 101.61. It's the area where we should have been in, but right now we'd be looking to take a target anyway, had you been in. So just be cautious about this one. Dropping down to, where is it? Dollar yen. So obvious what happened here, right? There we go. Obvious what happened here. Okay, whenever the U.S. stock market crashes, so does the dollar yen. Okay, it is a proxy. You can see right now, obviously, with the stock market not open, it's basically just sideways. We've been bouncing off this lower 4-hour zone. If you guys remember, we had this this yellow in here. This was a trigger. That's 109.85. We've actually pushed lower. We've actually breached this zone. We've come up and retested it. We've kind of pushed a little bit more. But you can see starting from the large daily zone up top, right? We had our impulse, our correction, our impulse, our correction, our impulse, our correction, our impulse, our correction, and now we're back into the impulse. Well, the interesting thing about it is this one has a zone here, which is a pretty nice little one, right? Right there. And again, that's what, about 60 where we currently are. And then we start getting into where that big wick came from, okay? A little bit of basing here as well, right below this. So getting to an area, I think we will continue to push down on this one. If it goes down about another 60 pips to 109, that's where we're getting into areas where I'm expecting to see some slowdown, some indecision, some drama and things like that. So just keep an eye on that on your radar. The big releases that for this week on this one, Wednesday for retail sales, but right now, I mean, and that's it, basically. I mean, there's core sales, and then the retail sales number at 8:30 on Wednesday morning. That's the only really big bit of news this week for the U.S. So obviously there's a bunch of orange ones, things always come out. I think this one is going to be dominated by the China story. We'll see. But like I said, being a low news week, I don't expect a lot of movement in this one. I think we will grind down, but I don't think we're going to have anything large unless there's something catastrophic that happens. So again, keep this one on your radar. My only recommendations for you this week, guys, without any big, huge, major action-packed news days, really besides Wednesday morning, the best two opportunities for trades this week are going to be those Austin ones at night because of such low volatility of traders. It gives us a good option to kind of trade. Besides that, you're going to have to drop your time frames down. I really recommend right now, we're looking at daily 4-hour, 30-minute. I'd recommend dropping these things down to 4-hour, 30-minute, and 5-minute. Drop them real low. Look for some small time frame trades. If you guys are not familiar with the spreads, slower weeks like this are great weeks to try spreads. They trade with the underlying asset, a little bit more similar that way. That would be where I'd kind of recommend kind of keeping your eyes focused this week. Go spreads. You can try some touch brackets, although I'm afraid that we may not have enough movement to actually break any of the touch brackets, but doesn't mean you can't get in and get out of them. But this would be the week to try it without too many news releases. All right. So with that being said, guys, that will wrap us up this morning. For those of you who don't know, again, you can go over to MajorLeagueForex.com. If you guys want to chat with us or have more questions about any of the setups or even about those time frames, go over there. This is what the website looks like. Click on this button right here that says Discord. If you're unfamiliar with what Discord is, it's a chat program. It's basically a chat room. It's free. It doesn't cost anything for you guys to get in there. And you can go over, join, ask questions of me or any of the other traders in there. If you have any questions and you don't feel comfortable with Discord, again, Microsoft produces it. Great program. We love it. You can email me at support@MajorLeagueForex.com. Or if you get on Discord and you just don't want to join the chat room, you're more than welcome to message me directly. MLFX Bryan, number 1495. That's how you have to enter it to be able to send me a message. All right. So with that being said, guys, thank you so much for joining me. I will see you next week. Next week does have more news releases than this one, thankfully, and we'll get back up to the larger volatility and movement. But trade safe this week, and I'll talk to you soon. Take care.